Investing in crypto is easy on paper, but actually pretty hard in practice. It's easy on paper because if you invest in the big coins and you wait a few years, your net worth will go up a lot. But what's the problem then, internet man? Crypto, you see, really investing altogether, it messes with our emotions. You get susceptible to fear and greed and all the kind of crazy that happens. So let's discuss the 5 biggest mind traps so that you can actually avoid them. The first is trading big right away. So you've heard from that guy who makes a living as a day trader, right? You just can't wait to cancel your 9-to-5 job. Screw the boss, man, I'm out of here. We'll trade crypto for a living. So you set up your account with the crypto exchange. Let's go, right? You put your annual salary on there. Put in those first trades. Heck, man, 10x leverage. I'm a genius anyway, so I'm gonna make loads of money. So you throw in a few $1,000. You long fart coin. Everyone's talking about it now. It's obviously the big thing. Oh shit, is the price down 10% and you're liquidated. Goodbye to all your money. So why not put on an even bigger trade the second time around? Well, I was just bad luck. I'm gonna double it up now. I'm gonna make all my money back because I gotta make all my money back. I just lost a month's salary. Good luck. The fastest road to financial independence indeed. Longing fart coin. Well, at the right time was a great call, of course, but the wrong time is a bad call. Most people call it at the wrong time. So let's just pause here and regain our composure for a second, because you want to do that after you take a big loss, of course. Have you learned about risk management? How to size your trades? There are books and courses about that, of course. How to avoid revenge trading, aka falling prey to your own emotions in the markets. You got angry, you lost. You need to win. You have to make sure, though, that you stay in the game, and that requires a cool head. You have to be able to fight another day. Don't blow yourself up, ever. You have to live, you have to survive, you have to stay in the market. If you blow all your money on a few bad trades, you're back to square one with nothing, or square zero, even worse. So why not consider, if you haven't traded before especially, putting the training wheels on, do some paper trading first. Look for a crypto exchange that offers trading with play money. It's sometimes called mock trading or demo trading, and yeah, okay, it's not as fun, but you're not risking a bunch of money. Or if you do want to make it real, if you're gonna have a better attention span for it, start small, put $20 on a trade, not your life savings, okay? Anyway, once you start doing this, you can analyze your trades, your emotions, they'll stop getting the better of you, and you'll see where situations where money was made and it paid off, okay? The second thing, following the herd. The major news outlets that report on crypto display herd behavior. They report on the prices only when they've already gone up a lot. That's when it's great and the water's warm, so we should all hop in. And they say crypto's dead and never coming back and going to zero at the market bottoms. Now, this media attention brings in new and experienced investors who largely lose all their money. The herd is all moving one direction, and then when there is no one left to buy, the prices start crashing as the herd moves in the opposite direction. Okay, new investors feel either forced to follow the herd into selling or have to sit on their coins that are underwater for, well, years, potentially. By the way, the herd mentality is hardly better among crypto investors and stock investors, for example. Everybody's susceptible to it, no matter what you're investing in. Make no mistake, investing is full of manic depressives, okay? At least it seems like that sometimes when you look at what's happening on social media. One day it's new paradigm money, next day it's going to zero. When prices have gone up for a while, people are posting new price targets. The goalposts always get moved, which is why you have to have a plan and stick to it, because people always move the goalposts. Oh, it's going to go to 200K, now it's going to 500K, now it's going to 1,000,000K. But when the price has been dipping for more than a few days in a row, doom and gloom sets in. It's all going to go to zero. It's over. We were all deluding ourselves that this Ponzi is the new paradigm of money. It's not. It should go to zero. Send it to zero now. And that rallies again, and people just get screwed every direction possible. It's crazy. And these emotions, this herd behavior, it's all too human. Of course, this is how we behave. You have to be counterintuitive. You have to be a contrarian to the herd. Almost no one is completely immune to it. We all fall victim to it to some degree. But you can vaccinate yourself at least a little bit against it through knowledge. Yeah, knowledge, right? Good vaccine, that one. Knowledge really is power here, because when you have power, then you can outperform the herd. And knowledge comes from reading about the history of this crazy asset class, reading about the history of market, reading about market cycles, educating yourself as much as possible about top indicators and buying indicators and all this kind of stuff. If you read about the flash crashes, the exchange blowups, you realize that people back then also thought that it meant the end of everything. But it survived, it thrived, it went on, and people made life-changing money. The people who survived that period. Now, before we talk about security, because this is probably one of the most important things where people lose so much money, I get so many sad messages all the time. You guys have to take your security more seriously. I swear to gosh, you're not paranoid enough. But let's take a quick moment to hear from today's sponsor. Are you a gamer or developer looking for the next big thing? Then check out today's sponsor, Altura, the perfect mashup of blockchain and AI. Altura empowers developers with easy-to-use tools, and this awesome crypto gaming platform has built the world's first AI toolkit for GameFi developers, taking a step forward to be the market leader in Web3 AI-enhanced games, bridging the gap between gaming and the artificial intelligence world. It has an AI generation tool wherein developers and gamers can design assets with just one click. It also has a groundbreaking NPC engine that brings non-playable characters to life by giving developers the power to craft NPCs that actually think. And the NPC Engine Plus also gives them memories, which allows for even more unique relationship building with those NPCs. Say goodbye to the boring canned responses and robotic NPCs that we've literally made memes about. All of this can be played in a game world that is easily designed and easily modified using Altura's game engine. And there is more. Altura's Play Wallet is your all-in-one gaming wallet. It integrates effortlessly right across Xbox, PlayStation, PC, and mobile, allowing you to manage your assets on the fly without ever hitting pause. How convenient is that? Aside from the tech, Altura also ticks a lot of other big boxes for crypto enthusiasts. The ALU token has a strong community ownership, no whales, no VCs controlling supply. It has even collaborated with top gaming industry players like Unity, Immutable X, and over 250 Web3 games. Learn more about the future of blockchain right now. Click on the link down below, and thank you for supporting our sponsors. Now, the third trap that's far too common is bad security management. See, in our banking system, you would need to try quite hard to lose your money. Sure, paper bills are easily lost and people still send money to random scams they get on their emails and stuff like that. But generally, your bank is trying to make sure you don't lose money. Well, at least, not officially anyway, lose it through the basement and all that stuff, and that's a different story. Even if the bank goes broke, of course, in many cases, the government will step in and cover the bank's losses and cover your deposits. But not in crypto. In crypto, if an exchange goes bust, the government doesn't step in for customers. If you send crypto to a scam or approve a malicious contract, your money's gone. What happens instead in these situations is, of course, if an exchange goes bust or something, is months-long or years-long bankruptcy processes where you just get screwed. And I don't want you to panic because there have been, of course, plenty of reputable exchanges out there like Coinbase and Kraken and Binance and Crypto.com, which are running for a long time without any issues. But it still remains true, not your keys, not your coins. Okay? Most crypto holders keep at least part of their holdings in a self-custody wallet, and ideally not on an app wallet, but an actual hardware wallet, something like this. That's where long-term holdings should sit. The coins that you don't want to touch, at the end of the cycle or whatever it might be, because self-custody is a skill, and people are afraid to self-custody. It feels comfortable to have it sitting on an exchange. And yeah, if you're keeping your coins on Coinbase, it's safe enough, but it's not 100% safe. If you lose, of course, your ledger, people are worried, well, there's no recovery phrase, maybe I didn't write it down in the right place, there's no help desk you can call. It's a responsibility, okay? Your money's gone if you lose access to this. So take it seriously. Maybe you start off small. You don't have to go high stakes. Send some small transactions back and forth between your exchange wallet and your ledger wallet. Just keep it simple. Practice, practice, practice. Get comfortable using it because this is the safest way to store your coins. Now, if you have to use a software wallet, such as an app or browser extension, make sure you read about the scammers that are out to drain your wallet because it's not the safe option. Okay, do not mess around with this. Or rather, mess around with it, but only in small amounts. Again, self-custody. In fact, you can use these bad boys to back up your hardware, your software wallets, right? There's a link down below if you want to get yourself a wallet, but honestly, take your security seriously, guys. Most of you guys are not anywhere close to paranoid enough about your crypto security, and you need to be more paranoid. The next trap is having no risk management. Now, a portfolio of financial assets is something that you have to manage, and that's not acting on a random person on YouTube or X or wherever you've heard speak about a certain stock or a certain coin and that they're bullish on it and they think it sounds like a good investment. I'm going to go buy some of that. Hey, this guy that talked about it. Please stop. Please stop. Don't randomly buy anything that anybody on the internet says. Not me, not any other big content creator, okay? Many of us have also tried, of course, their hands at trading and logging in for the first time on an exchange, getting excited about those green candles, putting in a big long, all that kind of stuff. But did you know that a common size for a trade for a lot of professional traders is like 1 to 2% of their portfolio? They're not throwing in 20% or 50% or 100% on their first trades, not even thinking about stop losses or anything like that. They also do their own research. There's entire venture capital firms and research firms that spend all their days looking for hot new things to invest their money in. They're not just watching a YouTube video and hearing some dude talk about something and go and buying it, okay? Your money is on the line, and trading is a zero-sum game. Investing is a zero-sum game, meaning for every winning trade, there's gonna be someone else losing out there, okay? It's not always exactly like that, but you should think of it like that. And even for an investor who just holds it, doesn't help just to throw money at the market and see what happens. You still have to invest smartly, because especially in crypto, the vast majority of the stuff's gonna go to zero in the next bear market. It's never gonna recover. So you need to develop a thesis around your investment stuff, right? A time frame in which your thesis plays out, your invalidation points. You should have invalidation points. Also, you want to learn about portfolio management, how to balance out risky and less risky assets, okay? How to rebalance your portfolio in times of need, how to take profits, because taking profits is also part of your risk management strategy, moving back into cash. Just like a sports team has, offense and defense, you should have offense and defense in your portfolio too. Learn about it, educate yourself. It's fun too, so, take it with a smile on your face, okay? It's a fun thing to do. The final crypto trap, investing more than you can afford to lose. Such a classic one. Everybody damn does it. I am way in over my head in terms of investing more than I can afford to lose. I guess I could afford to lose it all, but I wouldn't want to, gosh darn it. Anyway, are you invested to an amount where you're gonna end up homeless or on the street if your portfolio goes to zero? Because I know that some of you guys are, and you need to stop that shit. It's crazy, okay? Far too many people are doing this. It can be more subtle than that though. If 80% of your portfolio is in Solana, let's say 80K of your 100K portfolio and Solana drops 95%, well, how are you gonna sleep at night? Maybe you're gonna sleep like a log, and I salute you if that's the case, okay? Most people won't. Most people will be up all night tossing and turning. I'm an idiot. Why didn't I sell? Why didn't I sell? Why didn't I take some profits off the table? Why didn't I listen to those people on the internet who said that you need to take profits, the market's gonna take them for you? If you're the kind of person who's gonna wake up from a nightmare that features a burning portfolio, well, then you've probably found a bit of your answer, that you are too deeply invested. If it's keeping you up at night, you're taking too much risk. Ideally, any trade you make, you should sleep like a baby afterwards. Shouldn't be a problem, because you got your stop losses set up, you've managed your risk, your positions, you're well diversified across the market, one asset is taking up 100% of your portfolio, et cetera, et cetera. Even if you hold your Solana or something through the bear market, would it be a financially sound decision to do so? Think about it. Think about it. If you were to do that, would it actually be a good financial decision? And basically, for every altcoin you're going to make that conversation on, it's not going to be a good decision. We don't invest just for the numbers, of course. We invest for our quality of life. And if your quality of life is being diminished because you're too deep in the markets, you're taking on too much risk, you have too much leverage, et cetera, what's the point? What's the point? All those sleepless nights are going to add up. You're going to miss quality time with your family and all the rest of it. So why do it? Okay? Take this very seriously, because it's not just about, well, I invested more than I can afford to lose and I'm going to lose some money. No, it affects everything, man. It affects your well-being. It affects your vibes on life. It affects your relationships. It affects everything. Now, I know what you're saying, but if I invest more than I can afford to lose, then I'm going to make so much more. Not necessarily. Not necessarily. In fact, many times, because you've invested more than you can afford to lose, your back's against the wall and you start making bad decisions consistently instead of good decisions consistently, because you've elevated the risk, you're acting too emotionally, and you screw up. Been there, done that. Don't do it. Don't recommend it, okay? Think wisely. I hope that these tips have helped you to some degree, and that they're going to help you navigate this choppy crypto market and to win and to make money. Thanks for watching.